Africa has become the world's newest economic battleground. But this isn't a fight fought with missiles or soldiers. It's fought with railways, ports, mobile networks, and trade deals. On one side, we have China, with its trillion-dollar Belt and Road Initiative pouring money into highways, power plants, and digital infrastructure. On the other, we have the West, with its traditional dominance, multinational corporations, and development aid. The question is simple, but the answer is anything but. Who is actually winning the economic race in Africa? To understand why this race matters, you have to see Africa not as it is today, but as it's becoming. The continent is home to 1.4 billion people, expected to nearly double by 2050. That means 1 in 4 humans on the planet will be African by mid-century. But it's not just demographics. Africa is resource-rich, holding 30% of the world's mineral reserves, including critical materials like cobalt, platinum, and oil reserves stretching from Nigeria to Angola. Add to that a young labor force, expanding cities, and a rapidly growing consumer market, and Africa looks less like a frontier and more like the world's future economic engine. This is why both China and the West see Africa as the next great prize. But their methods couldn't be more different. China entered the African economic stage with a simple, aggressive formula. Build big, build fast, and don't ask too many questions. Over the past 2 decades, Chinese loans to Africa have surpassed $160 billion, funding everything from Kenya's standard gauge railway to Ethiopia's massive industrial parks. Trade between China and Africa hit nearly $282 billion in 2022, making China the continent's largest trading partner for 14 years in a row. And unlike Western investors, China doesn't shy away from politically unstable or authoritarian regimes. It sees them as opportunities, not risks. But China's edge isn't just money, it's visibility. When an African citizen takes a Chinese-built train, uses a Huawei smartphone, or plugs into electricity from a Chinese-financed dam, they see China's impact directly in their daily lives. The West, by contrast, has taken a more traditional route. The U.S. and Europe have historically been Africa's largest aid donors, providing tens of billions in development assistance every year. Western firms dominate sectors like oil, finance, and consumer goods, while organizations like the IMF and World Bank have shaped Africa's economic policies for decades. But here's the catch. Western money usually comes with conditions. Requirements for democratic reforms, environmental protections, and transparency. While these sound noble, African leaders often see them as strings attached, slowing down projects or limiting flexibility. This is where China scores a crucial point. It offers speed and simplicity. If a government wants a new highway, Beijing delivers. If it needs a loan, the paperwork is minimal. For leaders under pressure to show quick results, China's model is hard to resist. On paper, China looks dominant, more trade, more visible projects, and faster execution. The West still leads in aid and corporate presence, but it often feels less visible to ordinary Africans. But raw numbers don't tell the whole story. Because influence in Africa isn't just about who builds the most bridges or sells the most smartphones. It's about long-term leverage, trust, and resilience. And in this arena, the race is far more complex and far more unpredictable than it seems. So, beyond the flashy statistics, how are China and the West actually shaping Africa's future? China's most visible strategy in Africa has been infrastructure diplomacy. Roads, ports, dams, and railways, symbols of progress that ordinary citizens can see and use. The standard gauge railway in Kenya, for instance, cost around $4.7 billion, financed almost entirely by Chinese loans and built by Chinese companies. It cut travel time between Nairobi and Mombasa in half, but the project has been losing money since it launched. Kenya now struggles to service the debt, and freight operators complain of high fees. This pattern is not unique. Ethiopia's Chinese-built rail link to Djibouti has also faced operating losses. These examples highlight a paradox. China's projects often deliver visible short-term wins, but leave countries with mounting debt burdens. Between 2000 and 2020, African governments borrowed more than $150 billion from Chinese lenders, and today, about a dozen African countries owe China over 30% of their external debt. Critics in Washington and Brussels call this a debt trap strategy, accusing Beijing of deliberately over-lending to secure political influence. The most cited case is Sri Lanka's Hambantota port, where inability to repay loans forced the government to lease the port to China for 99 years. African leaders fear similar scenarios, but the reality is nuanced. Many African governments argue that without Chinese financing, these projects would never exist at all. The West, they say, talks a lot about development, but delivers little when it comes to hard infrastructure. For a young African entrepreneur, a new power plant matters more than IMF lectures on fiscal discipline. So is it exploitation or partnership? The answer depends on who you ask and whose interests you value. Unlike China, the West positions itself as a champion of sustainable development. U.S. initiatives like Prosper Africa and the Partnership for Global Infrastructure and Investment promise to mobilize billions in private investment for African projects. The European Union has also pledged 150 billion euros under its Global Gateway plan. But the problem is, Western capital often arrives slowly, with bureaucratic conditions attached. A loan from the World Bank can take years to negotiate. Western private investors demand stable politics, transparent governance, and low risk, criteria that automatically exclude many African nations. That's why, despite ambitious announcements, China's footprint still feels larger. In 2021, for example, U.S. trade with Africa stood at just $64 billion, barely a quarter of China's. Yet the West still wields a weapon China struggles to match: soft power. Western universities remain the top destinations for African elites. English and French remain dominant in business and government. U.S. cultural exports, music, film, fashion, shape African youth identity. Even in finance, the West has leverage. The U.S. dollar dominates global trade, meaning African economies are still tethered to Western banking systems. American tech giants, Google, Meta, Microsoft, are heavily invested in Africa's digital future. So while China builds bridges, the West builds narratives. And in the battle for hearts and minds, that may prove just as decisive. Take Nigeria, Africa's largest economy. China has financed railways, oil refineries, and power plants there. But U.S. companies like Chevron and Exxon still dominate the oil sector, while Western financial institutions remain critical for Nigeria's economy. Or look at Ethiopia, once a poster child for Chinese-led development. Chinese firms built industrial parks, railways, and telecom networks. But after Ethiopia's recent civil conflict, Western aid and diplomatic pressure have been pivotal in shaping its political settlement. And then there's Kenya. While its railway symbolizes Chinese ambition, the country still relies on Western institutions like the World Bank for budget support and debt restructuring. These case studies illustrate a pattern. China delivers speed and visibility, but the West provides stability and long-term influence. This rivalry is no longer just about economics. It's about geopolitical alignment. China frames itself as a partner of the Global South, offering a model of development without Western-style interference. The U.S. and Europe warn against Chinese influence, arguing it undermines democracy and sovereignty. African leaders, meanwhile, are playing both sides. They take loans from China, aid from Europe, and investments from the U.S., leveraging the rivalry to maximize their own bargaining power. But beneath this balancing act lies a deeper question. What happens when economics spills into politics and politics into security? Because increasingly, the race in Africa isn't just about trade figures or infrastructure. It's about who will shape the continent's strategic future, militarily, technologically, and ideologically. And that's where the story takes a dramatic turn. China's presence in Africa isn't limited to construction projects and trade. In 2017, it opened its first overseas military base in Djibouti, right on the Horn of Africa, near one of the world's busiest shipping lanes. Officially, the base supports anti-piracy missions. Unofficially, it signals China's intent to project power in Africa and beyond. The U.S., meanwhile, has long maintained military dominance. AFRICOM, the U.S. Africa Command, oversees dozens of military outposts across the continent, focusing on counter-terrorism operations from the Sahel to Somalia. France, too, retains troops in West Africa, though its influence has been declining after recent coups pushed French forces out of Mali and Niger. This matters because economics and security are linked. Countries that build Africa's infrastructure and defend its borders gain not just contracts, but loyalty. And increasingly, African governments are asking, who will provide both? If infrastructure is China's hard power, technology is its stealth weapon. Chinese companies like Huawei and ZTE have built more than 70% of Africa's 4G networks and are pushing aggressively into 5G. In some countries, Huawei runs national data centers, meaning critical digital infrastructure sits in Chinese hands. For Beijing, this is more than business. It's influence. Controlling networks means shaping digital ecosystems, surveillance capabilities, and even political discourse. The West sees this as a major threat. Washington has repeatedly warned African allies that Huawei technology could compromise security. In response, American firms like Google and Microsoft are expanding cloud services and laying undersea internet cables to connect Africa more directly to Western systems. So even in cyberspace, Africa has become a front line of competition between two digital empires. But the part that often gets overlooked in Western and Chinese narratives is that the Africa is not a passive prize in this race. African leaders are increasingly leveraging the rivalry to secure better deals. For example, when Zambia faced debt distress, it invited both China and Western creditors into the restructuring talks, forcing cooperation rather than domination. In Senegal, the government balances Chinese-financed stadiums with Western-funded governance programs. Ordinary Africans, too, are shaping outcomes. A young entrepreneur in Lagos might use a Chinese-built smartphone to code an app hosted on Amazon Web Services. A university student in Nairobi might study in London on a scholarship, but commute daily on a Chinese-built railway. These hybrid realities mean Africa's future won't be written by Beijing or Washington alone. It will be negotiated, contested, and redefined within Africa itself. So who is winning the economic race in Africa? If you look at trade and infrastructure, China is ahead. If you look at finance, culture, and long-term alignment, the West remains strong. But perhaps that's the wrong question. Because what's emerging isn't a story of Africa being won by outsiders. It's Africa itself rewriting the rules. By 2050, Africa's population and markets will be too large for either China or the West to dominate alone. Instead, Africa may be the true winner, extracting investment, technology, and security from both sides while charting its own path. And that leaves us with a final thought. Maybe the real race isn't about who wins Africa. Maybe it's about who adapts fastest to an Africa that is no longer a prize, but a power in its own right.